Good morning, good afternoon, depending on where you're joining from. We'll give folks a few moments to trickle in and then we'll go ahead and get started. We have a lot to cover. I feel like we say this every time, Mel, but it's fun to watch the numbers go up in the beginning.
I know. Welcome, everyone. It's good to see we're almost over 100. Oh, yep. All right. More than 100 of you already joining on this Friday. Thank you.
Yeah, once it starts to taper off, looks like we're slowing down here, so we'll go ahead and get started. Welcome. Thank you so much for being here, for spending your lunch hour with us. If you're on the East Coast, if you're on the West Coast, hope you have a nice cup of coffee or tea. I'm really grateful that you're here. If you're with us in December, we were talking about S Corps and whether or not you should elect S Corp in 2025 or not. So this is really a follow-up to that webinar. We're going to go a little bit deeper into common myths and misconceptions that are out there about S Corps. You're probably here because you've heard S Corps can save you money in taxes, which is true, but there's also just a lot of conflicting information and guidance on the internet, especially. And so we're going to tackle some of those today. Also, going to answer questions that you have. So, really, the goal for this session is for it to be engaging and fun as much as accounting and taxes can be fun. We live and breathe this stuff every day. So we are just here to support you as as business owners. So that said, just a few quick housekeeping items here at the top. This is a large group today. I think we had over 750 therapists RSVP, which is amazing. With that said, the chat for larger events just gets pretty noisy. So we did go ahead and disable the chat, but the Q&A is open. So if you have questions throughout, drop them in the Q&A. Melanie is here. She'll be helping to manage the Q&A. We'll save time at the end. This is being recorded, and so if you have to jump off, don't worry about it. We'll shoot you the recording later today. If you're watching the recording, thank you so much for tuning in. And we'll also email the slides as well. So we're going to show some numbers. We're going to throw some terms at you that might be new. Don't feel like you need to take notes. Just sit back, enjoy, and we'll share the slides with you after the fact. So before we jump in, would love to get a sense of the folks who are here with us. I'm going to put a poll up on your screen. Would love to know, are you already an S Corp? So possible answers here are yes, no, or I'm not sure. And if you're not sure, that's totally okay. All right, I'll give 20 seconds. So get your answers in. All right, so for the folks who are watching the recording, I'm going to read out the results. Hopefully you can see the results on your screen. 68% said no, 22% said yes. So great for the folks who are here who are already an S Corp. Hopefully this is confirming what you already know, maybe challenging some of the things that you thought that you knew, and 9% said, I'm not sure. So that's great. I will say if you haven't elected to be taxed as an S Corp, then you're not an S Corp. So you would probably know. But we'll get into how to become an S Corp and how that process works. So, maybe you did it a long time ago and you just don't remember. Quick intros. My name is Michael. I host our podcast, Heard Business School, where we interview therapy practice owners about their entrepreneurial journeys. We also bring in industry experts. It's a lot of fun. So encourage you to check that out if you're a podcast person. We're also on YouTube as well. And Melanie is here. She is our head of marketing. She'll be helping to manage the Q&A. And for anyone who joined late, if you have questions, I'm going to stop sharing the results of that poll now. If you have questions, drop them in the Q&A. If you are unfamiliar with Herd, if you're not a Herd customer, you're probably here because you are on our email list. So really grateful that you're here. Just as a quick overview, Herd is an accounting software company built specifically for therapists. Alongside therapists, we have a customer advisory board that we work with very closely. We talk to therapists every single day. And really, our goal is to empower you as a private practice owner through software as well as access to bookkeeping and tax professionals. This is a little bit of a spoiler, but the IRS deadline to elect to be taxed as an S Corp is coming up on March 17th. The typical date is March 15th, so you might have heard March 15th, but March 15th is over a weekend. So this year it's on the following Monday. So that is coming up in about 6 weeks or so. So if you're interested or thinking about S Corp for 2025, I would recommend scheduling a free call with our team at Herd. Happy to explain the process to you and how we help therapists navigate it. Quick disclaimer here, if you are an existing customer, these consultations are offered to prospective clients. However, you're able to message our team through the Help Center at any time, and you can request a free S Corp readiness report. So we'll look at your numbers and help you decide if S Corp makes sense for you or not. All right. With that said, we're going to jump right in. So our first poll here, technically our second poll, but the first myth that we want to tackle are whether or not S Corps are required to pay quarterly taxes or not. So again, answer choices are yes, no, or I'm not sure. These are anonymous, by the way, I should say. All right. Get your answers in. All right, 56% said yes, 16% said no, and 28% said not sure. So this is a myth. S Corps do need to pay quarterly taxes. Why is that? So S Corp is what's called a pass-through entity, which means similar to when you're taxed as a sole proprietorship, if you expect to owe $1,000 or more in annual taxes to the IRS at the end of the year, the IRS wants you to make estimated payments on that tax liability quarterly. So even as an S Corp, if you are paying yourself a salary and running payroll, you still owe taxes on your personal income tax. That's your federal and your state income tax. And then a reminder here, because we do get this question a lot from therapists at Herd, your tax payments. So when you make that estimated payment quarterly to the IRS or to your state, that is a personal expense. As a taxpayer, it's not a business expense. So you want to make sure that whenever we pay taxes, it's coming out of a personal bank account and it's not recorded in our books as a business expense. It's a personal expense. If you do make a tax payment from your business, you're going to be over reporting on your business expenses, right? Which is going to lower your profit. That's going to flag to the IRS, hey, something doesn't look right here. So in the event of an audit, that would get flagged. So want to make sure that any tax payments are coming from a personal account. Great. So before I jump into this next poll, I just wanted to stop for a moment and see if there's any questions, Melanie, coming through on anything that we've talked about so far.
No questions on that one, but we'll keep you posted. But seems pretty straightforward from a high level.
Amazing. And just a reminder for folks who joined late, the Q&A is open, so please drop any questions, and there are no dumb questions. All right, next one here. I'm going to put this up on your screen. Can S Corp election be made at any time? Again, choices are yes, no, I'm not sure. Also, just shout out to the people saying I'm not sure. Appreciate the honesty. We all have a learning mindset here, right? We're here to learn. All right, leave 20 seconds on the board. Get your answers in. All right, I'm gonna share out the results. It's fun, loving all these polls. Okay, so 54% said no. S Corp election cannot be made at any time. 15% said yes, and 31% said I'm not sure. So this is also a myth. S Corp election can't be made at any time. And let's talk about why. So there's kind of two dates to think about as it relates to the deadline to file your application with the IRS to be taxed as an S corp for that current tax year. So this is looking at 2025. If you already have a business entity established, so if you have an LLC, a PLLC, or a professional corporation, you have until March 15th to elect to be taxed as an S corp for 2025. If you want to elect to be taxed as an S corp for 2024, it's likely too late. There is something called a late election that you can file, but you have to make a case of why you missed the deadline. And at this point, the likelihood, at least from what we've seen, of that getting accepted by the IRS is pretty low. So we're really talking here about 2025 for this current tax year. Now, if you don't have a business entity established yet, so if you're a sole proprietor or you're just thinking about going into private practice at some point, you need to establish a business entity first with your state. Then you have 2 months and 15 days, which seems like a very weird specific amount of time. But you can think about it as March 15th is 2 months and 15 days after January 1st. So you basically have 2 months and 15 days after you've formed your business entity to elect for that business to be taxed as an S corp by the IRS. So just as an example here, say you form your LLC in the state of Arizona on June 1st. You have until August 15th, so June, July, August 15th, in order to be taxed, elect to be taxed as an S corp for the remainder of 2025. So I'm not going to go into kind of the late election process here, but what I would say at a high level is that we generally recommend like a complete tax year. Otherwise, if you elect halfway through the year or you try to file a late election, then you're being taxed as a sole proprietor for half the year and an S corp for half the year, and it just becomes a lot more complicated from a tax perspective. So now is a really great time to think about, does S corp make sense for my practice in 2025 or not? All right, we're moving right along. Great.
Yeah, I was going to say, I
Mhm.
think you spoke to this because we have folks who heard from a CPA that they can elect at any time. And so I think it's just, yeah, reconfirming that there's a potential edge case, but it's a dependency.
Yeah, I would say when you are working with a CPA or with a lawyer, kind of in general, it's about their interpretation of the law, right? So with a lawyer, it's the law. With a tax professional like a CPA, it's how they interpret the tax code. So technically, yes, you can elect S corp at any time if you file a late election, but the chance that that gets approved isn't guaranteed, right? So that's kind of the context there is like anything it's for the purpose of this we're talking like true not true, but there's always edge cases as well. So I would say consult with a tax professional. Probably should have said that as a disclaimer in the beginning. We have it on the bottom of the slide here, but really the purpose of this webinar is for informational purposes, but definitely consult with a tax professional before making any decisions about this stuff, whether it's with HERD or with the CPA outside of HERD.
And I think then just one other question, which again, I think a lot of this depends. Is it too late to try to form an entity before the March deadline? Like, what if I'm right now just a sole prop not incorporated?
No, I would definitely go ahead and do that. It really depends on the state and how quickly. I know in some states, like I formed an LLC in the state of Massachusetts, and it's as easy as just going on their website and filling out the form. And I think it was $500 to form the LLC in the state of Massachusetts, and then you get a letter in the mail. So, it takes a week or two. I think in some states like New York or California, where they're more backed up, it might take a while. So I would say at this point, like there's still time, but it also just depends on how long it takes for the state to turn around for you. Awesome. Great. So the next question I'm going to put up here, does S Corp make sense for everyone? All right, get your answer in. All right. So this one's a little bit easier. Hopefully, it looks like 0% said yes. So we're all in alignment here, although 20% said not sure, which is also okay. And 80% said no. So S Corp making sense for everyone. This is a myth. You may have heard, hey, you should just elect S Corp. Just do it. It's going to save you money in taxes. It can save you money in taxes, but it really depends. And so I want to talk about who is a good fit for S Corp. And this explanation is a little bit longer because I think this one is especially important. I'll also say that this is our guidance and recommendation at Herd. Again, if you talk to five different CPAs, they may have five different opinions on this. So kind of take that with a grain of salt that this is our recommendation at Herd for our clients. And so our recommendation at Herd, and I'm going to talk about why this is that S Corp starts to make sense when you're making $100,000 or more in business profit. This is for your therapy practice, your self employment income. Once you're at that six-figure threshold, that's when the tax savings of S Corp start to kick in. We're going to talk about if you're below that, why it may or may not make sense for you. Again, I've seen other accountants talk about at $60,000 or $70,000 or $80,000. What we've come to understand with the clients that we work with, really looking at the numbers over the years, is that that threshold really, we feel confident making that recommendation at six figures. But again, if you're below that, it still could make sense for you. If you're above that, it may not make sense for you depending on your unique tax situation. So again, every situation is unique, but kind of a general rule that we have at Herd in terms of our recommendation for S Corp eligibility is that $100,000. Also, that this is in profit, right? So it's not total revenue, total income. It's your total income minus your expenses. That's your profit. The other consideration to think about when you're deciding whether or not to elect to be taxed as an S Corp, in addition to this revenue number, is whether or not you're disciplined financially, because S Corp, there's more rules. You have to pay yourself a salary. So you can't just be taking money in and out of your business like you would as a sole proprietor. And there's also just more financial responsibilities and record keeping and things like that. So if you don't like that stuff, or you know what, that sounds like a lot to manage, that's totally okay. Just make sure that you understand what you're getting yourself into when it comes to S Corp election. And that's also not to scare you away by any means. But I would say that's an important consideration here in addition to that financial benchmark. So this is just a visualization of what I just described for any of the visual learners here. So if you're $100,000 or more in business profit, this is annually. Yes, with an asterisk here of it may be a good fit. So it's not definitely a good fit. It's not definitely going to save you money in taxes, but it is worth looking into. And if, again, you're below $100,000, just because we like round easy numbers here, then it may make sense to continue to operate as a sole proprietor. For folks who were on the last webinar about S Corps, this may be kind of a review of information that we talked about, but just wanted to mention this here as well at a high level. So when we talk about, who's a good fit, I think it's also helpful to think about what are the benefits of S Corp and then what are the trade-offs. So the big one being that you're just saving on self-employment tax. And we're going to show an example of what that looks like with some real numbers. So tax savings, that's the big one, right? You've probably heard that. There's also more flexibility when it comes to retirement planning. So if you've had a W-2 job that offered, 401k matching, where you contribute to a 401k and your employer matches up to a certain amount, that's something that you can do for yourself. If you own an S corp, you're both the owner and the employee, and that actual contribution would be a business expense. So that's nice. So As an S corp, you're really the owner of the business in addition to the employee, so you have a little bit more flexibility there when it comes to um, taxes. With that said, and this is why that revenue threshold becomes important, is that as an S corp, there's also additional expenses, and I have a breakdown of what some of those are. So you just want to make sure that at a really high level, the tax savings are going to outweigh the costs. And then, as I mentioned, it's just a more complicated tax structure. There's compliance rules. You have to keep meeting minutes. You have to have separate bank accounts. There's quarterly reports you have to file. There's just a lot of other administrative things that accountants love to charge extra for as well. So, want to make sure when you're meeting with an accountant, whether it's with Herd or outside of Herd, to figure out if S corp makes sense for you or not. Just make sure that you're not getting pushed into S corp before you're ready, because again, accountants are incentivized to recommend S corp because there's an extra tax return that they can charge you for. There's extra compliance and kind of administrative duties. So just want to make sure that you're not feeling pressured and you have all the information to make that informed decision. I see there's some questions here around kind of the financial breakdown. So I do want to show some examples, and I think that will be helpful for folks to see. Like, how do we get to that 100,000 number? Why is it 100,000? So this I think is really important before we get into the actual model of kind of S corp savings at different income levels. Just wanted to show you this is um, examples of typical expenses for electing and operating as an S corp. So the first one is setting up a business entity. I mentioned that before you can elect to be taxed as an S corp, you need to have a business entity with your state. And depending on where you live, I mentioned in the state of Massachusetts, I know it's $500 to form an LLC, and it's actually $500 a year to renew it. So it's very expensive in the state of Massachusetts to have an LLC. It really depends on your state. In some states, it's $25, and some states it's more. So the business entity costs is something that I was personally surprised by when I started my business. So just make sure that you check with your state and what that cost is. If you go to meet with a CPA or an accounting firm, a lot of firms will charge you for an S corp analysis, an S corp assessment. I've seen this be a $1,500 one-time fee. Worth noting here that this is something that we offer for our clients at Herd free of charge as part of their membership. So that's a possible cost here if you're to meet with a CPA about whether S corp makes sense for you or not. This is a big one. As an S corp, you're filing not just your personal tax return, which is Form 1040 on April 15th, but you're also filing a business tax return, which is called your 1120S. So it's an extra tax return. I've seen $1,000 or more for that business tax return filing. Some states are going to pay franchise tax. I know in California specifically, that starts at $800 a year. And then with an S corp, you're going to have to set up payroll and run payroll, pay yourself a salary. Tends to be about $45 a month so that's what the cost of payroll is with Herd. We work with Gusto. So like generally you're looking at around $2,000 to set up an S corp and then around $2,500 a year annually. So in the first year, you want to make sure, again, round numbers here, my tax savings really need to be at least $4,500 to cover the costs. And at that point, I'm not even saving, right? So we really want it to be more than that. And then on an ongoing basis, we're looking at about $2,500 a year, but this could be more or less. But again, just wanted to provide an example here of what those costs could be. All right. So I want to show sole proprietor versus S corp at 3 different net incomes, just to show you what this could look like. And so this first one is at $75,000. So this is below the $100,000 recommendation, right? So if we look at the right-hand side here, my net income. So I'm thinking about 2025 and I'm projecting out my income for the year, right? And I'm deciding, should I elect S corp or not? I'm projecting to make $75,000 this year. As a sole proprietor, I have to pay 15.3% self-employment tax. So that's 15.3%. You could just round it to 15. 15.3% self-employment tax on 100% of my net income. So I'm paying $11,475 in self-employment tax. I'm also going to owe, so I'm then all as a sole proprietor, 100% of my net income is just passing through to me. So I have to pay in federal and state income tax on $75,000 as well, right? So that's how you get to that kind of like 30% tax rate is your federal income tax, your state income tax, and self-employment tax. Now, as a sole, is if I decide I'm going to elect to be taxed as an S corp, same amount of net income at $75,000, I pay myself a salary of $60,000 a year. I get to this number because this is a reasonable salary of what therapists earn in my area. If I was going to go get a W-2 job, this is what I would likely be paid, kind of in this range. So I'm going to pay myself a salary of $60,000. As an S corp, I am paying payroll tax when I'm running payroll, which is equivalent, covers Social Security and Medicare. It's at 15.3%. So I'm paying 15.3% now on $60,000 instead of 75. So in terms of my self-employment or payroll tax, I'm saving $2,295 a year, which is great. But remember, I'm paying $2,500 a year to operate as an S corp. So I'm actually losing $200 a year being an S corp. After I pay myself the $60,000 salary, I have $15,000 left in the business. I'm able to take it out as what's called an owner's draw or owner's distribution. This is really the value of being an S corp. This $15,000, I don't pay self-employment tax on. So instead of paying self-employment tax on 75,000, I'm only paying it on 60. So $15,000, it's tax-free in the sense that you're not paying self-employment or payroll tax on it, but you're still paying federal and state income tax on it. So again, in summary, with these numbers, you're saving $2,295. But if you're paying $2,500, you're actually losing money. So at this income and this salary, S corp probably isn't going to make sense. If we jump to $100,000 using the same model here, now we're saving over $6,000 a year. So if we think about, and this is total savings, right? So again, you need to subtract the S corp formation and the S corp kind of management fees. But now we're looking at more like $4,000 a year. To me, this feels worth it, right? I'm saving $4,000. That's $4,000 that's in my pocket at the end of the year. Now, if this was like $500, I don't know if going through the whole process of becoming an S corp and all the administrative burden is going to be worth like $500. But at $3,000 or $4,000, after the expenses of operating as an S corp, definitely. And you can see as we go up now, so now we're at $150,000. Now I'm saving $13,000 a year. So the key here is as your net income goes up, as long as your salary is staying the same, the profits that you're able to take out of the business as an owner's draw go up. And this is where you realize those savings. So I hope that was helpful. I know that that was a lot of numbers. I want to stop here before we move on.
Yeah, I think a few questions just to clarify around this. Folks may have talked to a CPA who said that they could elect a S corp at a lower income level. Can we just speak to that a little bit?
Yeah. So when we go back to well, I was told at 60K or 70K that I could elect to be taxed as an S corp. It really depends on your salary, right? So yes, if you're at 75K and you pay yourself a salary of $20,000 or $30,000 a year, you're saving more in the sense that you're able to take out more as owner's draws and owner's distributions you're not paying self-employment tax on, right? But it's risky because if you're paying yourself a salary of $20,000 or $30,000 and you were to get audited, your S corp was to be audited by the IRS, and the auditor determines your salary is too low. This is not a reasonable salary. You're taking advantage of the S corporation tax designation by not paying yourself a reasonable salary, you are going to have to pay a penalty on that. And then, depending on what the reasonable salary the IRS determines is, you may owe back taxes. So they may say, you've been paying yourself a salary of $30,000 a year. A reasonable salary is $60,000. You're going to owe back payroll taxes on the $30,000 difference, right? So again, like you could pay yourself a lower salary and you may be okay, but it's just a riskier position. And we're in the business at Herd of protecting our our clients, right? And so our financial responsibility is to protect our clients from the IRS. And I can share that last year 0 clients were audited by the IRS that filed their taxes with Herd. So that's something that we take very seriously. We have a fiduciary responsibility, right, as um, the the partner that's working with you on this.
Great. And then there was a question about what if I'm already S corp and I maybe am not benefiting? Can I consider unelecting?
Yeah, I think I have a slide on this in a moment here. What I will say is that yes, if you elect to be taxed as an S corp, maybe you received guidance like in the beginning. You should set up an S corp, so you did that. You're not really seeing the benefits, or actually like maybe you have scaled down your practice, so your income has been reduced. You can dissolve your S corp. It is a I don't want to say it's a complicated process, but it's not an easy process to do so. Likely what you'll end up doing is actually dissolving the business entity entirely. So if you have an LLC that's taxed as an S corp, you dissolve the LLC and then you either form a new LLC that's taxed as a sole proprietorship, or you just operate as a sole proprietor. The issue with that is if you have business bank accounts associated with that business entity, or if you're contract with insurance companies, like you have to basically rip all of that out, which can be administratively a pain. You know, it's it's like similar to you get married and you change your name. It seems like it should be an easy process, right? But there's like a million forms you have to file, and it can take a while to hear back, and you may not hear back, and you have to chase people down. So it's just anything with the federal government takes a while to process. So that's definitely a consideration. Yeah, I saw just a quick question on owner's draw. So how does this work, right? So if I pay myself, let's jump over here. If I pay myself a salary of $60,000 and I make $100,000 a year, there's $40,000 left. How do I take that out? I just take it out. I transfer it to myself as an owner's draw, owner's distribution. I record that in my books. We just want to make sure that it's regular. So what this looks like is, I take it out once a month. I take it out once a quarter. We want to make sure we're not overdrawing here just from a cash flow perspective, right? Especially because we know as a therapy practice, cash flow can be inconsistent. It might slow down over the summer. And when we're paying ourselves a salary, it's consistent. So we also want to make sure that the owner's draws that we're taking out of the business are consistent as well. Yeah, and then this question here from Abby: when you say 13K in savings, that means owing less in taxes. Yes, you're reducing your self-employment tax or payroll taxes. All right, these are great questions. I think we have 2 left. So this next one, I'm gonna go back. All right, are S corps difficult to set up? So I talked about dissolving an S corp being challenging, but what about setting up an S corp? Leave it up for 20 seconds. So got 3 more seconds. Get your answers in. All right, I think the last one was too easy. This one looks a little bit better distributed. So are S corps difficult to set up? 38% said I'm not sure, which is great. That's why you're here. 36% said no, and 26% said yes. So this is actually a myth that S corps are difficult to set up. The process of actually setting up an S corp and electing to be taxed as an S corp is relatively straightforward. It's the management of the S corp and staying in compliance that's more difficult, and then also dissolving the S corp. can be challenging as well, but actually electing to be taxed as an S corp by the IRS is pretty straightforward. There's really four steps here. The first one is determining whether or not S corp makes sense for you, which this part I will say can be challenging to try and figure out what the savings are on your own. So definitely recommend consulting with a tax professional here. Step two, if you haven't already, forming a business entity with your state. So not to sound like a broken record here, but form that business entity. So that's the LLC, PLLC, professional corporation with your state. And then you go to the IRS and say, I want to elect for my business entity to be taxed as an S corporation. You can't just form an S corporation without a business entity. This is the important step here. You submit what's called Form 2553. This is basically telling the IRS, hey, this is my business entity, name, EIN, all those things. I'm electing to be taxed as an S Corp starting on this date. So if you elect to be taxed as an S Corp before 3/15 this year, we would set your S Corp election date retroactively to January 1st. So essentially, you have kind of a full tax year as being taxed as an S Corp. I double checked this morning. You still can't file 2553 or submit 2553 electronically. You have to fax it or mail it. Likely your accountant will do that for you unless you're managing all of this on your own and you would mail it in. If your application is approved to be taxed as an S Corp by the IRS, so as long as you meet their qualification criteria, you'll receive a notice in the mail that's called CP 261. You have to wait. It can take 60 days. So if we were to meet with you today, we determine, yep, you're projecting to make $150,000 in profit this year. It's a no-brainer for S Corp. We're going to submit this paperwork on your behalf. We're going to get you started on payroll, and we're going to start operating as an S Corp before this, approval is received because, we just feel confident about that. But it can take a while. It can take up to 60 days, right? So 2 months before you even hear back from the IRS. So we're going to want to start running payroll and start operating as an S Corp. This is really important that you keep a copy of this because again, for whatever reason, there's no like digital records of this. You can't go to the IRS website and like download your CP261. So we're going to ask you if you are an S Corp and you join Herd, we're going to ask you for a copy of this. So whenever I get any sort of tax forms in the mail, I always like put them in a folder and I put them in my desk, which is not very secure. I probably should have them in a safe. But don't ever like throw away a tax form from the IRS, or at least like scan it and keep a digital copy, because it can be a pain to try to track this down later. We do have members at Herd who tell us they're an S Corp, but they don't have this form. So we request it and then they have to go to the IRS and that can take months to get it from them. So I want to make sure you hold on to this. If you are an S Corp and you don't know where this is, it's not the end of the world. You can request it. But if you're electing S Corp, just make sure that you have this somewhere. And then I already mentioned this here, but it can be difficult to dissolve an S Corp. In other words, go from S Corp back to sole proprietor. So just make sure that, you feel confident in this decision. And it's not like an impulsive decision that you're making. All right. Looking pretty good on time, about 20 minutes left. Cool. So I believe this is our last poll. It's kind of a spicy one. Spicy as it gets, I suppose. Does S Corp provide liability protection? We get this question a lot. All right, get your answers in. So for the folks watching the recording, 41% said, I'm not sure. That's good. Hopefully learning something new here. 36% said no, and 23% said yes. This is also a myth that S Corp provide liability protection. So S Corps do not provide liability protection. And that is because S Corp is a tax designation. S corp is not a legal entity. Now, when you form a legal entity, so if you form an LLC, you form a PLLC, you form a professional corporation, that does provide liability protection in the sense that it separates your business and your personal assets. So if you were to get sued, which hopefully isn't going to happen, uh, the lawsuit would be against your business. So they can come after your your business assets, money that you have in your business bank accounts, et cetera. But they're not going to come after your house or your car or your personal assets. So the liability is provided by the legal entity. S corp is just how you're taxed. It's the taxation status. Now, with that said, as a licensed mental health professional, you're also required to hold professional liability insurance. Um, and so there's a reason why an LLC is called a limited liability company, right? It doesn't completely protect you from liability personally. So it's also important that you have that professional liability. Let's say your malpractice insurance as a therapist, and that protects your license. And then not to go too into this because this is probably a whole separate topic, but just wanted to quickly touch on business entities. So if you're well, jumping ahead. So if you haven't formed a business entity yet and you're thinking, wow, this sounds great, but I don't even know like where to start with that process. So again, if you're, limiting your personal liability isn't like super high priority for you right now, you just have kind of like a small practice on the side, it's okay to continue to operate as a sole proprietor. And in fact, it's very common. But if you are feeling like, yes, I want to kind of do this right, I want to separate my business and my personal assets. If you have multiple owners in your business, so say you're, opening a practice with a spouse, you would likely form a partnership. This is the business entity. Um, if it's just you as the solo owner and you're based in California, because California likes to have their own rules, you would form what's called a professional corporation. And you would likely elect for that professional corporation to be taxed as an S corporation. If you're not based in California, so if you're in the other 49 states, you would likely form an LLC, which is the most common business structure. Note that when you form an LLC, you're still taxed as a sole proprietor by default. So your tax status doesn't change when you form an LLC, but you can elect to be taxed as an S Corp, which is a nice benefit. And then in some states, you are required, if you want to form an LLC, you are required to form what's called a PLLC, which is a professional LLC. States like Texas, New York are common examples, but definitely just check with your state. You can check with your state Department of Revenue is a good resource. Also, just your state licensing board. They're also super helpful. Just reach out to them, see if they have any recommendations. I know California, especially, they have the California Association of Marriage and Family Therapy is a great resource. They have in-house legal counsel that are available for members. So definitely leverage your state licensing board if you have questions about any of this. Ooh, I know that was a lot. It was really quick. We hopefully it was helpful. I did want to mention this. I know at the top I mentioned that I host our podcast. We had Andrew, who is our CEO, on the show, and we did a deep dive into S corps. So encourage you if you're interested in learning more about S corps. You can find this on every podcast player. Also, it's on YouTube. So if you just search Heard Business School, you should be able to find it. Um, and then I mentioned this at the beginning, but this is something that we help you with at Heard. So if you're feeling like this sounds great, I'm definitely above that 100K threshold. I just want to go ahead and get started. As a Heard member, this is something that we help you with really end to end. So we start with that S Corp eligibility assessment. We file that form 2553 on your behalf, and then we help you get set up on payroll, help you determine your reasonable salary, really takes the stress and guesswork out of this process. So if you are not a Heard member, this is a benefit of becoming a Heard member. And if you're here and you are a Heard member, I encourage you to reach out to our team, send us a message through the Help Center, and we can get that process started for you. And then for folks here who are not yet members of Herd, again, I'm going to throw this up. This is a QR code. I think Melanie can drop in the chat as well a link to schedule a free call with our team. So we offer free 30-minute consultations. It's really, no pressure, risk-free. Meet with someone from our team, learn more about Herd, and also get any questions answered that you have. We do have, just because we're kind of heading into tax season and this is our busy time of year, we do have a minimum annual income requirement in order to book that one-on-one consultation. That's $20,000 a year. But we are offering some tax season pricing as well. So this is for new members, offering discounts on catch-up bookkeeping, a call with a tax advisor. And if you do elect S Corp or you're already an S Corp, we're offering 3 months of payroll complimentary, as well as a call with a financial advisor. I looked at the math with Melanie this morning. That comes actually out to almost $2,000 a year in savings, which is really nice. So trying to make this, more accessible for folks. All right, we have about 10 minutes, so I want to make sure that we save time for questions. I think we did pretty well.
Yeah, I think one just to re-clarify is with that $100,000 income level, can we clarify exactly how we're generating that? Is
Yes,
it,
so that's your net income, right? So it's your profit. So if your total income or what's called your gross income is $120,000 a year and you have $20,000 of expenses, you have $120,000 minus $20,000, that's $100,000. That's how you get to your profit, right? So the reason why we look at profit is you pay taxes on your business profit. And so when we look at S Corp and S Corp savings, we're looking at really what is the amount in self-employment tax we're paying on our business profit as a sole proprietor versus if we were to switch to an S Corp, what would we pay in taxes and payroll taxes, which is equivalent to self-employment tax. All right.
yeah, I think if we can maybe go back to the slide where we were reviewing different scenarios with different reasonable salary amounts and just re-clarify the distinction between your pass-through profit and your owner's wage. Just
Yes.
to, that'd be great. There's a few questions around that.
Yeah. So again, here, right, we're starting in our net income. So this is our profit. We meet with a tax professional and they determine a reasonable salary for a therapist in my area is $60,000 a year. They do the analysis on that. So I'm paying myself $60,000 a year, which is $5,000 a month, right? I'm just paying myself a salary like I would if I was a W-2 employee, which leaves $40,000 left. So this $40,000 I can take out of the business. And so I can do that quarterly. I can take out $10,000 four times a year as an owner's draw. I can do it monthly. It really just depends. But that's how we get to that number. And then Kathy mentioned, just want to address this. S Corp does provide liability protection. So just want to clarify the liability protection is provided at the business entity level, right? So in order to form an S Corp, you have to form the entity first. So that's for that liability protection. So as an S Corp, technically, yes, you are receiving liability protection, but it's from the business entity, not from the tax designation.
Yeah, I think there were just a few questions. Just, yeah, to reiterate that S Corp is a tax entity designation.
Yep.
And when we think about LLC and PIA LLC and or being a sole prop even, those are your business entity designations. So it's definitely confusing and funky because you have kind of different designations that you're working across. And so, yeah, it's worth just re-clarifying that S Corp is how you are taxed.
Right. Yeah, it's a great question. Carol asked, are there more taxes to pay on that draw? Yes. So when we think about like this pass through profit, basically what you're taking on that draw, you're not paying self-employment or payroll tax. So basically, you're saving 15.3% is a way to think about it on that. But you're still going to pay federal income tax on that amount. That's why we have this amount subject to income tax right down here. And the reason it's called pass through is it's just passing through the business entity to you as an individual taxpayer, is why it's called a pass through entity. Essentially, like the money's passing through your entity. So if you're an LLC, it's like passing through the LLC to you. So as an LLC, something that I learned when I formed my business is I thought, well, if I don't take money out of my LLC, I don't have to pay taxes on it because it's technically in my business. I didn't pay myself that money. It's not the case. Because an LLC is a pass-through entity, similar to an S corp, whether you take it out or not, you're still going to have to pay income tax on it. It's still your money. It's in a business account versus a personal account. So an owner's draw doesn't get taxed with payroll. Correct. So owner's draw is separate from payroll. Interesting. So Abby asked, are there concerns about how your reasonable salary, which is likely lower than your profit, it hopefully should be, right? As an S corp, might affect future lending or availability to qualify for loans. It looks like we make less than we do. It's a good question. I can't speak on that just because I'm not like in the lending. I don't know, Melanie, you come from the lending industry, right? Or I guess you have more of a finance, I guess it's more real estate, but yeah, I'm not sure how that works. My senses are probably looking at your total income, so not your salary. They're probably looking at your like, when you went and filed your taxes, what was your total income on your 1040? That would be my assumption. That's what they would look at, like your household income. Um, Speak to dissolving a professional corporation, going back to sole proprietor, approximately 50K. What forms would I need to do? This is a great question for a tax professional. I'm not sure the specifics on the tax forms required in order to dissolve an S corporation. So I would definitely, consult. There's also like the legal aspect of that as well. So you may want to talk to like a legal professional about that. The line between kind of legal and tax is blurred. Like there's tax attorneys, but there's some things that are definitely like more of a legal question than a tax and accounting question. All right. Let me see. If not filing as an S corp, is there benefit to having a PLLC? That's a good question. So the benefit of an LLC or PLLC is that liability protection, right? So you're separating your business and your personal assets. Also, you can go to a bank once you have a business entity and you can get a business bank account, you can get a business credit card, you can take out a business loan. So from a banking perspective, there are benefits. Also, some people just like the formality of being able to say, like, my business is an LLC or a PLLC. It just seems more legitimate. So there's like that branding perception. I know for me, when I started my LLC, it felt like, it was a more legit business because I was an LLC. Like, granted, is that worth paying $500 a year? Probably not. Um, so it's that piece. I will say, like, there's a lot of people who just operate as a sole proprietor, and that's fine. You can get what's called a DBA, doing business as. So if you want to have like a name of your business, you can do that, and you don't have to actually go through the process of creating a LLC or PLLC. Yeah, in terms of owner's draws, my understanding is you can just transfer that money. There doesn't need to be like a formal way that you do that. The most important thing is just that you're recording those transfers in your book so there's records of it. In the event of an audit, you can say this is the draws that I made.
And then we just have a question here about if they went with Herd, just re-clarifying if we would handle the process of filing and maintenance and taxes with S Corp.
Yep. Yep. So we work with you on that. We have an S corp team that is really great. And we've been working kind of on the back end over the past year to really improve the process of how we create that S corp readiness report. And it's very thorough. Like I've seen the report that you get, and it's like super in depth, really helpful. Because our goal is that at the end of the day, the decision to elect S corp or not is on you as the business owner. We can make a recommendation, right? We may say we don't think you're a good fit, and you can decide to move forward, and that's totally okay. We also could say, hey, we think you're a good fit for S corp, and you can save money in taxes, and you may say, I'm not comfortable with that, and that's also fine too. Awesome. Well, I know folks probably, have clients here at the top of the hour, so we'll let you drop off. When I end the webinar, there's going to be just a quick 3-question survey. If you could fill that out, that would be really helpful for us to just continue to receive feedback and improve these presentations. There's also a question about what else you'd like to see. So as we think about this year and other webinars that we're putting on, would love to get input from you. And with that said, thank you again for being here. Enjoy the rest of your Friday. Have a great weekend. And I'll just pop this up one more time. So again, if you are interested in scheduling a call with us at Herd, you can just schedule, or excuse me, scan this QR code on your phone. It takes 30 seconds to fill out the form. We'll shoot out someone asked about the recording. We'll email it out to you, and we'll drop this link in as well. Great. Thank you, everyone.